My name's Michael, and welcome to another episode of the Midweek Market Pulse. Stocks are dropping yet again, and I'm going to be discussing what you guys should do as investors and what you should expect. Let's get right into it. All right, the market is dropping yet again. The last 5 days, the Nasdaq is down 1.93%. The S&P 500 is down 0.60%. And the Dow Jones is down 0.40%. We were off to a good start in the beginning of the week as investors were weighing in the more softer approach that Trump was taking with his tariff plans, with his reciprocal tariffs. But sadly, he imposed another thing of tariffs. So he is going to be implementing a 25% tariff on all imported cars. And this is to be implemented on April 2nd, the so-called Liberation Day. I don't really like this Liberation Day, that's for sure, but it's coming. So Wednesday we saw a big sell-off. Today we're even seeing a big sell-off when the PCE reports came in. Pretty negative. So from our market pulse on Tuesday, the Nasdaq fell 0.58%, the S&P 500 fell 0.56%, and the Dow Jones increased by 0.02%. With all these tariffs, there's really no sign of Trump stopping, and I don't think the market is coming out of the correction anytime soon, that's for sure. The future is like a dense fog that you can't really see through, and there's no telling what's going to happen next. So for a recap of the market calendar, new home sales came in positive with a 12,000 increase from February. This is primarily due to the slight decrease in mortgage rates. This with home starts kind of shows that the housing market is somewhat strong. It has some strength to it, and it's in a pretty decent place. Wednesday, Dollar Tree came in with negative on the revenue side, and positive on the earnings side. But Dollar Tree is just a dying stock, and I do not recommend any of you guys get into this company. That's for sure. This stock is just going to the ground. Thursday, Lululemon released its earnings. It came positive with the EPS of 6.14 and a positive revenue of $3.61 billion. Very strong company, increasing its market position in the apparel and footwear industry. Although this is a cyclical stock, so the industry kind of moves up and down with profit, really depending on consumer spending. And right now we're seeing that consumer spending isn't really the strongest. On Thursday, also, initial jobless claims came in slightly strong. It stayed the same from last month at 224,000 initial jobless claims. So the estimates were a little off. Unemployment did rise by 0.1% from last month, but it's nice to see that initial jobless claims is kind of staying the same, and the market is not reacting to it all that much. Till we get today, when the PCE and core PCE came out, and it was not good. So the PCE came in hot, showing a price increase more than expected last month, rising 0.4% month over month and 2.8% year over year. Year over year came in right around the estimate of that 2.7% to the 3%, but month over month came in 0.1% higher than expected. With the increase, consumers are spending money, but not as strong as I would like to see this number come in. There's always a bull market somewhere, like Jim Cramer says, and I'm going to be talking about the bull market right here with Bowhead Specialty Holdings, such a great company. So they primarily offer property and casualty insurance, as well as professional liability and healthcare liability risk. Now their PNC, the property and casualty insurance, is probably their biggest sales channel for them. Their balance sheet looks tremendous. Very strong assets, very strong investments. They're trading at a PE multiple of 34.35, so a little bit higher than I would like to see, but still a pretty strong PE. Their EPS is estimated to increase by 0.53, which earnings drives the stock price up, and that is what we like to see. Their revenue is estimated to increase by 292.52. They're also already starting a share buyback program. Now, they had their IPO in May of 2024, so they're a newer company, but they're already starting to do a share buyback program. That is great. Purchased 140 shares in October of 2024. A company this young already doing a share buyback program is tremendous, and I love to see that. The price is at a fair value right now. Their fair value price is 40.54. I invested in the company around 40, so it was an undervalued investment, but it's trading right around its fair value. And it has very low institutional holdings. It has 163 institutional holdings. I like to see anything under 200 or even 100 when this number starts to increase. This is when these institutions who really control the market start to drive the stock price up, which just causes quite the bubble, and that pops, and the stock price declines pretty severely. They have more selling than purchasing for insiders, but not necessarily a bad thing. This could mean that maybe some of the insiders are just trying to sell their shares for some more money, maybe trying to pay off their kids' college. Who knows? But I don't think this really is a bad thing. With the pressure on inflation and the possible hike in interest rates by the Feds this year, it could be a good thing for Bow, as they do invest a lot of their money in bonds. Any hike in interest rates could really increase their investment profit. It operates in America also, so you don't have to worry about any tariffs, and it's pretty much an intangible company. They do not sell any tangible products. Now, they also implemented a new software called Baleen, which helps them do some of their underwriting. So another strength to the company, that they have a subsidiary that they run. And all this software was made in-house, which is even better. So more profit coming into Bow's Head Specialty Holdings. Definitely recommend taking a look at this company. It's super strong from just some of the stuff I said, but do your own research. And yeah, the stock price has been going up. I think as we see some more institutional ownership and the stock price continues to drive up, I would probably be a little wary of it. I would also wait for this stock to come down a little bit. It is somewhat overvalued, and with a high PE multiple, I would like to maybe get in again at 35, or I would recommend you guys to get in maybe around 35, or any drop, but definitely see this stock drop. And it's still showing strength even when the market's down, so that's another positive thing. So what's next for the future? Like I said, it's hard to really tell. It's like a dense fog right now, and when with Trump implementing all of these new tariffs, and I don't think he's going to stop anytime soon, I definitely would be a little wary, and I don't think we're going to be coming out of this correction anytime soon. From what the Feds do end up seeing with the tariffs, I expect them to increase their interest rates. So this is also going to be another negative thing for the stock market. I am quite optimistic, though. If we look at all of these different years for the S&P 500, we can see that right now it's not starting off too strong, but it's not the worst. And I think we will be able to recover. I think it'll definitely take longer than expected for the stock market to recover, but these are just more buying opportunities for very strong companies, and you're getting a discount, so you can't really complain right there. Even a safe bet, invest in the S&P 500. It's down right now. Statistically, it's going to come back up in the next 10 years, so you definitely get a good discount on the stock price right now. So that's all I have for you guys. Thank you so much for watching. Make sure to hit the subscribe button, like the video, and drop any comments, questions, or concerns you have.